Hello and welcome to another episode of Bidishanomics. I am Sabika Syed and with us Dr. Bidisha Bhattacharya, our consulting editor for economics, who takes your very interesting questions. Bidisha, I'll start with Surbhi's question. She's asking, India's data center sector received major tax holiday incentives and quickly attracted investment commitments. Does this suggest that targeted tax holidays work better than broad corporate tax cuts or even PLI schemes in driving fresh industrial investment? Which model would work best for India in generating revenue?
Thank you, Surbhi, for asking this question. It's quite interesting and something that needs to be discussed extensively in the current economic environment. So let me start with the number. India approximately generates roughly 20% of the world's data, but it hosts just 3% of the global data center capacity, for that matter. So it's very similar to we produce the raw materials, but then we send the raw materials abroad for them to store, process, and finally we buy it back from them. So very similar to we growing our mangoes and then sending it abroad to prepare the juice and then buying the juice back. So this gap basically the government planned to address, wanted to address, and how it chose to address that gap is what this question is about. So what did India actually do in the budget 2026-27? The government announced a targeted tax holiday for all the foreign companies or organizations that decided to that would come to India and build data centers. They would build infrastructure, cloud infrastructure in India, and that tax holiday will extend or will go up to 2047. Now that's a 21 year of zero tax that they would be paying. That's a big promise that way, and something that promises a lot of long-term big infrastructure. Now, the result was very evident. I mean, all the Googles, Amazons, Microsofts for that matter, they invested heavily, in the data center and cloud infrastructure immediately. And the data center capacity, or the sector rather, I would say, has been growing at 24% every year. And we can expect the capacity to grow from 1.5 gigawatts today to 8 to 10 gigawatts for that matter by 2030. And so it's a staggering leap. So now and the thing is that in Surbhi's question, she specifically mentioned about the corporate tax cut or other PLI schemes, and what would be the right way, or if this is the right way. So I think the best way to discuss or figure out whether a tax holiday or a PLI scheme, or for that matter a corporate tax cut, which would be the right direction to take. Let's first talk about the broad corporate tax cut, something that India did back in 2019. So what did they do? They decided to deduct the effective corporate tax rate from 35% down to 25% for the already existing companies, and way down to 17% for the emerging manufacturing firms, for the new manufacturing firms. Now, as a result, of course, the goal was that if we deduct the corporate tax rate, then the companies will have more money in their kitty, and as a result, they will invest more, they will profit more, they will sell more. However, it did not turn out as planned. What happened was two things happened. One is specifically that research showed, or analysis showed, that the large companies benefited from it, but the smaller companies or the smaller enterprises did not really benefit much. And second, after the announcement of this tax rate cut, there's an RBI report, and RBI found that multiple significant number of companies were working at 69 to 70% of their capacity and not 100% capacity, which pretty much implied that all these companies already had all these factories had some idle machines that were not in use. Now, in this kind of a climate, reducing the tax that you pay is not going to do much to the development or growth in investment for that matter. I mean, if a company was paying a little more tax, now that there is a little bit of tax rate cut, that would not incentivize the company to sort of expand their businesses or build a new factory for that matter, and it did not promote investment to a great extent. Now, then came the PLI scheme. So tool number 2 was the production production linked incentive scheme. Now this worked remarkably because this was completely based on a concept which is also called in economics, which is also called PLI, but it is called performance linked incentive. Now here the government said you produce more, you sell more, and we will be giving you a cash reward based on how much on your actual sales. If you have not been able to sell enough, then there will be no payment whatsoever. Now this worked remarkably for the manufacturing sector. This, to an extent that it absorbed huge amount of actual investment. There are numbers of PLI schemes attracting 1.76 lakh crore in actual investment. It generated over 16.5 lakh crore in production and sales, and it actually also generated or created 12 lakh jobs. And mobile manufacturing especially increased by 146% in 4 years, for that matter, which was a big, in terms of scale, it promoted greatly to the development and growth of this economy. So PLI schemes, it was clearly understood that PLI schemes benefited greatly when it came to the manufacturing sector. Now coming to the third tool, the targeted tax holiday.
Right.
Now, this is what the data center policy uses. And what makes this fundamentally different, what makes this targeted tax holiday fundamentally different from the aforementioned two, was that specifically the conditions. So, in targeted tax holiday, there are certain conditions that the foreign companies have to abide by. One being specifically that, you have to employ certain amount of people, certain number of people from India. You will also have to make sure that certain equipments are being routed via Indian entities, and only then will there be the tax holiday that will be assigned to the project, the data center or cloud infrastructure. And this works remarkably well, not just for the data center, but also for semiconductor infrastructure as well, for green energy as well. Now, which is better? I believe that three of them are good depending on how you utilize them. For instance, when we are looking at the manufacturing sector or looking at scale, PLI would be the best way to go for that matter, because PLI kind of helps with increasing the scale, it brings in actual investment, it generates more jobs. So production linked incentive is the way to go. When it comes to long term big investment, for that matter, and something that could promise investors that this particular tax structure or this particular procedure will not change over decades, over say 10 to 20 years, that's where a targeted tax holiday comes handy. And which is why I mentioned, not just for data centers, not just for cloud infrastructure, but for semiconductors as well, because we are heavily investing in that particular area. And also green energy, renewable energy for that matter, which also requires years and years to build that infrastructure. And that will sort of reinstate or establish, rather not reinstate, but establish trust in foreign investors. And of course, the broad corporate tax rate cut can be sort of like a broader tool or a broader incentive just to show how competitive India is with the rest of the world. So it completely depends on how they are being utilized and for which sector.
Yeah. Now, Bidisha, Lakshmi Narayan is also saying that people make comments on what the government should reduce tax on, what the government should invest on, but there's rarely much conversation happening around wasteful spending of the government. He's asking, where does the money go? What has the Indian government historically spent its money on? What was the opportunity cost of not investing in the things we should have? And they're also suggesting or asking if you could do a series on revenue or expenditure statements of individual state governments.
This is a very interesting question to ask in terms of Indian public finance, I believe, because you're absolutely right. We spend a lot of energy discussing on what the government should actually spend on, and much less energy on whatever the amount of money has been allocated. Is it being spent correctly on or not? So I'll get to, the different parts of the question. First, talking about the basic number in the budget of 2026-27, the Indian government is going to spend approximately 53.5 lakh crore. Now, this is not a shocking number. The shocking bit is, out of this, 26% or the interest payments or the money that goes into paying the old debt is 26% of the total expenditures and also accounts for 40% of the total revenue receipts, which means for every 100 rupees that the Indian government earns, 40 rupees is gone into paying older debt. Even before a road is built, even before the money goes for building hospitals, schools, anything for that matter, then we are left with the 60 rupees. So here, something very interesting. Now, you may ask, where does this 53.5 lakh crore amount go to? Now, if I would have to segregate it, I would segregate it into 4 big buckets. The first bucket, number 1, would be interest burden or the interest payments, which is 26% of the total expenditure. This money doesn't generate any new kind of investment or new money. It is just the money that goes into paying the older borrowed money or the older debt that we have generated. Second comes bucket 2, which is defense. Now, in defense, the Ministry of Defense usually gets approximately 13% of the allocation, around 6.81 lakh crore. This is the single largest allocation that goes into defense, the Ministry of Defense. Now, here's something very interesting, and we have actually done a Cut the Clutter episode on this, that 50% of this allocation goes into paying salaries and pensions or the revenue expenditure side of it, and barely even lesser than 30% is actually left for spending in modernization or buying new equipments, in capital expenditure to be specific. Now, this is something that the government needs to look into and navigate through and see that if they can increase the capital expenditure over time or not. Coming to bucket 3, subsidies. Now, the allocation to subsidies for this budget has been approximately 4.54 lakh crore. Now, the sad bit is fertilizer subsidy or let's say food subsidy accounts for 87% of it. Now, subsidies inherently are not bad, but there has been a brilliant comprehensive report that has been done by IFPRI and ICRIER together, which has shown that 28% of these subsidies or 28% of the grains, rather 28% of the grains that have been distributed under the public distribution system actually doesn't even reach the intended beneficiaries. And approximately, even if we look at the amount, then 69,000 crore to 70,000 crore actually gets leaked out of the system that could have been used for any other developmental projects for that matter. Next comes bucket 4, which is the transfer to states, which is approximately 26.5 lakh crore that goes to from the center to the state governments, and rightly so, because states wait for this money to be able to spend on local infrastructure and sort of municipalities, local bodies as well, and of course schools, hospitals, and every other expenditure for that matter. But that quality of spending or exactly what is going under which category is something that he is very, the viewer is right, that needs to be looked into. And here I would like to talk about one economic concept that we are taught since our bachelors for that matter, which is opportunity cost. So if you plan to spend the money in something, then what is it that you're letting go of exactly, and that tells you the opportunity cost of investing or utilizing the money in that particular sector. So now this 69,000 crore or 70,000 crore that I just spoke about is the opportunity cost or the money that could have been utilized to build highways, to build better infrastructure, to build schools, and sort of better government. 700, there has been an estimate that 700 government hospitals could have been built with that money. So now, talking about wasteful spending and more broadly, is that data available? Yes, it is publicly available to an extent, but nobody takes that pain to read it. It by the Comptroller and Auditor General. There are reports out there publicly available where you can go and see where exactly did the government spend, be it center or states for that matter, which area was it spent on, were those projects completed or they have been stalled. To a great extent, you can get data on that. But there are, of course, Lakshmi Narayan has also asked if there are resources where you can get deeper information. So there are two books that I could say. One for, an academic deep dive. There is a very interesting book by M. Govinda Rao, which is called Studies in Indian Public Finance. The best part about it is he kind of looks into how much of Indian public expenditure or investment has been foregone because of certain political commitments. So this book is available online as well. And then we have another very interesting from an empirical perspective by Gayatri Karnam, which is Public Expenditure in India. Now, this book looks at historical trends of center as well as state level expenditure, and just going into a granular kind of level. Then definitely you have the PRS legislative research and PRS legislative reports, which give you, not just union budget analysis, but also state budget analysis for that matter. And then the RBI Handbook of Statistics to Indian States, CAG reports. Now coming to state by state series, you're absolutely right. There should be a state by state series, and we have already started doing it at ThePrint. So there is one article which last month, if I'm not wrong, that I wrote, The Big Squeeze, two states specifically, Karnataka and Maharashtra, two of the wealthier states in this country. And the headline is that, why are these states spending more but building less? And that completely highlights, I'll take the example of Karnataka. Specifically Karnataka, in 2025-26, the committed expenditure or the revenue expense, that is salaries, pensions, interest payments for that matter, was accounting for 78% of the total expenditure, which meant only 22% was left to build something worthwhile in terms of building and infrastructure. And this is something that we are talking about, a state which is being looked at heavily, even from the data center point of view that we spoke. I missed out one important point in the last answer, that we might get all amount of tax holidays or anything for that matter, but if the local or the infrastructure is not available, and by infrastructure I don't just mean building, cement, etc. I also mean power, I also mean water. Global data centers or data centers in general, they consume huge amount of water. It has been estimated that approximately in 2025 itself, data centers have consumed 150 billion liters of water, and it can double up to, and more than double to 350 billion liters of water as well. So these are the areas that, and the global data centers are being planned to, or the work is going on in sort of cities like Chennai, Hyderabad, Bangalore, Mumbai for that matter, and Bangalore comes under Karnataka. So these are the areas that definitely need to be looked into, and I completely agree. We are doing state level studies to just look at the data and understand the data. So
yeah. Now, Bidisha, we were talking about what countries spend on and how countries make money. Surbhi Kumar is asking, how does a country make any real money by giving away its currency for free? If Japan's interest rates were 0%, who was actually pocketing the profit, and what did Japan get out of it? And now that the party is over with BOJ hiking interest rates, how does it impact global economic market?
Japan is one of the most fascinating stories in modern economics. And again, I'll have to cite one of my articles itself that I had written on Japan. And that was a time when there were only discussions around tensions in West Asia and tensions in Middle East. But then I noticed how well the Japanese economy was performing exactly around that time, when every other country or economy was grappling with this particular disruption. So firstly, it's important to understand that why Japan did what they did. It's important for us to go back a little in history to the late 1980s, when everything was doing very well in Japan. Japan was booming, stock prices, property prices were at an all-time high. Everyone was making money until the bubble burst. So all markets crashed, banks were sitting on a mountain of bad loans, and sort of Japan kind of slipped into something that I find way more dangerous than inflation, which is deflation. So deflation usually comes across as more of a with a positive connotation that so prices are falling. What's the big deal about it? The big deal is it kind of pushes you into a trap which is very messy and difficult to come out of. Now, what exactly happened is if you expect as a consumer or a citizen that the price of a TV that you were planning to purchase today is going to fall tomorrow and is going to continue to fall tomorrow, or if you are a business for that matter, that sees that, you know, if I expand my factory today, then the commodities that I will produce tomorrow, the price of that will go down.
Yeah.
As a consumer, I will wait before I purchase. I'll wait for a month more before I purchase that TV. As a producer, I will think that why should I produce then more if I won't earn any profit for that matter in the long term. So nobody spends, nobody produces, people lose jobs, the economy basically freezes.
Yeah.
That's a very, very dangerous situation where people are not being incentivized to spend at all for that matter. And exactly around that time, the Bank of Japan had decided that we are going to reduce the interest rates to near zero level so that businesses are incentivized to kind of, you know, spend, draw out loans, borrow money and spend. However, I'll get to if that happened or not, but something very interesting otherwise took place, which is, I'll give you the example. Say, for instance, you have a neighbor who you borrow money from at 0% interest rate, okay? And then you take that money to another neighborhood and you lend that money at 5% interest rate, ठीक है? क्योंकि वहाँ पे 0% नहीं मिल रहा है, at 5% interest rate, you lend that money. Now, obviously, you earn profit and that difference you pocket it, right? That exactly was what hedge funds, foreign investors, any smart investor for that matter, insurance company, even Japanese financial institutions started doing. And there's a term for it. It's called carry trade. Please remember this term, CARRY, carry trade. So after a particular point around in the 1990s or so, Japan had reached sort of foreign investments equivalent to $4.5 trillion, which was a huge amount. In foreign investments, domestically nothing is happening. So all the foreign investors, they were taking the money in Japanese yen, they were converting it into US dollars, Australian dollars, even Indian rupees for that matter. They were lending it even in markets, and, you know, there were carry trade positions for that matter. They were lending it at 4%, 5% interest rate, and whatever profit they were earning, that difference, they were pocketing it. Now, this continued, and which is why this particular phase is called Japan's lost decade. But in my opinion, it should be Japan's lost decades, because there are 3 decades that this particular situation happened, and that completely destroyed certain facets of the Japanese economy for that matter. Now, of course, I mean, internally, nothing was really booming, nothing was increasing up until 2024, when the Bank of Japan noticed that the wage growth has started happening after 33 years or so. Which made them realize that, okay, fine, now probably deflation is being defeated, inflation is coming back into the picture. Now, I would like to mention here that how did Japan get out of it, or what did Japan get itself out of it? Let's say everything can't be bad in this situation, because the Japanese yen became so weak in this entire process. As we say that, you know, if a currency depreciates a little, it's good for trade, because then your exports get cheaper and they get more attractive. That's exactly what happened with Japanese companies like Toyota and Sony for that matter. Their exports became cheaper and that market kind of started growing. Then moving to, of course, what happens to the world right now, that, you know, this part of the question, that Bank of Japan has raised its interest rate to 0.75%. Now, this is the highest level in 30 years, rightly so, and it's a very small increase for that matter. But when something increases after 3 decades, it kind of plays around, or makes the market kind of wary. Why? Because even now, what the entire market started experiencing was carry trade unwind. What happened is, now those foreign investors who had taken this money out in Japanese yen, converted it into other currency, they realized, now if we have to pay back to the Bank of Japan, we will be paying higher interest rate compared to the 0 interest rate in which we had withdrawn the money. So now what happens, of course, everybody kind of got a little panicky, and we saw that in 2024 as well, when the Bank of Japan had increased the interest rate a little bit. The stock market in Japan had sort of gone down by 12%. The US market also was affected by approximately 6% for that matter. Now, in this particular situation, there's a very interesting angle that she asked, that India,
Yeah.
does India have anything to do with it? Will it be insulated? Firstly, does India have anything to do with it? Yes, India has something to do with it. Will it be insulated against whatever is happening right now? Not really. So there are, of course, claims that are being made that, 100 is just a number. Let rupee depreciate. I'll tell you why it's not just a number. Because now we import electronics and machinery from Japan. What happens is, right now the Japanese yen is strengthening because interest rates have increased. What happens now, the fact that investors have gotten a little panicky, the first thing that investors do, and we've spoken about this in earlier episodes as well, the first thing that investors do when they start fearing that something is about to happen is they start withdrawing money out of emerging markets or riskier markets, and India is an emerging market. So capital outflows will start taking place, which is what is happening. There are FPI outflows that have taken place. Net FDI has also fallen. At the same time, that will put even more pressure on the rupee. That will make our rupee even weaker. Let's say, for instance, rupee goes down to 100 for that matter, but we are still importing Japanese machinery and electronics. So our import bill will rise even further. Our trade deficit will worsen even further. So India does have something to do with it, but we will, because right now it is estimated, analysts are estimating that there are still $500 billion in carry trade positions still in the market, whose unwinding has not taken place yet. So we don't know how this thing is going to pan out, but definitely India will not be completely insulated from this.
Okay. Now, Bidisha, the next question is by Wizard Buzz. They're asking your analysis of the RBI report 2025-26 on the divergence between record harvests and decelerating agricultural GVA points to the same underlying anxiety. India is growing impressively, but not yet where most people are. Given that agricultural value realization remains fundamentally a procurement and market access problem, and that services still dominate 69% of real GVA growth, do you think India's macroeconomic foundations are now strong enough to absorb the political cost of the structural reforms that would actually connect this growth to its waiting beneficiaries?
Thank you for taking out the time first to read the analysis. It is a long one. So to answer this question to you, it's an important question, especially you took out one particular line where I spoke about, the gap between abundant harvest and falling farmer income. And that is not really any other problem, but more of a pricing and a procurement problem.
Okay.
So this was something that I specifically mentioned in the article as well. So now, first let's quickly understand, or sort of update ourselves rather, what exactly was mentioned in the RBI annual report. So India grew at 7.6% in 2025-26, fastest major economy in the world. Manufacturing has had a wonderful performance of 11.5% for that matter, which is, been the best performance so far in the manufacturing sector. Consumer spending was up, private investment was up, inflation actually went down. Agriculture sector, services sector, every other sector was doing well, and the fiscal deficit specifically was low. Inflation actually went down from 4.6% to 2.11%. 4.6% in 2024-25 to 2.1%, and foreign exchange reserves, which is right now standing at 691 billion for that matter, which is worth, as we had discussed in earlier episodes, worth almost 11 to 12 months of import cover. Now, on paper, it looks like our economy is firing on multiple cylinders, right? But if you look at the granular level, and this is the data mentioned in the RBI annual report with graphs, the agricultural gross value added has fallen from 4.2% in the previous year to exactly flipped, 2.4%. So what's exactly happening is there were abundant harvests. because of that, because it kind of flooded the markets, the farmers ended up earning much lower than what they usually earn.
Okay.
Now, there are multiple reasons for it, of course. Now, why does the farmer earn less in this particular situation? This is a complete, of course, in economics, a demand supply thing. When there is abundant supply, of course, you cannot influence, you don't have any bargaining power, you cannot influence the prices, and the prices or the amount of money that you earn drops. Now, from the farmer's point of view, there are certain things that an Indian farmer still cannot exercise, and I would like to highlight those. So, right now, let's say everyone grows rice, wheat, different other pulses for that matter. But in India, most farmers don't have access to cold storage facilities, or they cannot directly go to the companies or different markets and sell it. They have to be there usually at times forced to sell in government procurement facilities, like mandis for that
Yeah.
matter. Or there are middlemen involved who absorb most of the sort of prices or the revenue, and they end up getting lower money for the production. And in general, as we stated, 69% services has contributed 69% to India's economic growth. But services don't really generate huge amount of employment or scale. Manufacturing does, but we went through, as an economy since 1991, we went through something called the premature industrialization, where we directly jumped from agriculture to services, and there wasn't complete industrialization, which is why this industrial policy is now being talked about extensively, 2.0. So here, India's growth story in general, coming back to farmers. So from a cold storage point of view, now why am I talking about this cold storage facility specifically, is that then what farmers can do when they see that the prices have dropped, they can actually for a while utilize those cold storage facilities for the harvest, wait for the prices to come back to equilibrium, and then sell. But at this point, they do not have that liberty to do so, otherwise crops will go waste. There'll be a wastage problem. And also, as I stated earlier, in government procurement facilities, they are forced to sell at times in these mandis, which are at much subsidized prices for that matter. So now, what reforms could actually help these farmers? The first would be, as I stated, let farmers sell to whoever they want, and then they accordingly can bargain for the right price, not just through these government schemes or through these mandis, but also food processors, supermarkets directly. Not There's no need for any unnecessary middlemen. Then coming to making price guarantees not just announced. Now this is where MSP plays an important role. There are certain price guarantees that are given for every crop. For wheat, say for instance, this budget announced an allocation of 2,585 rupees per quintal of wheat, but these are left on paper. They are not really implemented. There are multiple farmers who will say we've never received those guarantees. Then comes the third one, which is building cold storage and rural market infrastructure. Now, this money that is being kept for, let's say, apart from salaries, pensions that every state uses for revenue expenditure, this capital expenditure, how can that be utilized? Not just for services, not just for manufacturing, but building this infrastructure which will over time actually help the economy save up sort of more money, regulate prices properly, and the farmers who kind of feed 42 to 46% of India's population, they will also earn their due pay for that matter. Now, why is it hard? It is hard because the government tried to bring about a reform in 2020, and we all know what happened. There were 3 farm laws, and the farmers rightly revolted. I'll tell you why. Because specifically, they felt that if the MSP safety net goes down, they will have to negotiate and bargain with these large companies, and they will have no bargaining power there, and they will have to accept whatever price they say. So, as a result of which, they revolted. There were protests day after day, and in November 2021, Prime Minister Modi decided to repeal all those 3 farm laws. And because in 2022, Uttar Pradesh and Punjab election was also coming. So in this particular situation, economic incentives and political incentives are two very different stories. What was wrong with the 2021 or the three farm laws was not economics, it was politics.
Yeah.
And the only problem there was that no farmer or no farming community was consulted before even announcing those three farm laws in the first place. So that is something that the government needs to do this time. Is the Indian economy ready? Absolutely. Indian economy right now, given what, the statistics that we see, or the RBI annual report, that our fiscal deficit numbers as well, or revenue deficit for that matter, this is a very, very good time for India to do some structural reform,
Okay.
long lasting, long term reform. And agricultural sector, or the farming community specifically, would be a very good point to get started with.
Okay.
Definitely, but of course, consulting with the farmers, understanding their pain points, their concerns, and then going about and sort of, enacting these farm laws, because there were multiple economists who probably sided with, say, the Congress government, the right, left, whatever it is. All the economists in unison had agreed to these farm laws, and they said that this would be very beneficial to the community. But the process in which these were enacted was not the right way.
Right.
So, yeah.
Now, Bidisha, for our last question, I'll take Arvind's. He's asking, can you do a deep dive on the recent Government of Kerala white paper on its finances?
Thank you for this question, and I would like to mention here that we are actually working on doing something of that sort, because the appreciation that we had received for the analysis of the, after TVK, BJP, and the United Democratic Front in Kerala, they had won. We did an extensive analysis on the state kind of profile of West Bengal, Kerala, as well as Tamil Nadu, because all three of them are affected by debt in some way or the other, and also welfare commitments in Kerala are very high, and they have actually exceeded the revenue receipts in Kerala. So given the white paper, I'm going through the white paper, and that is something that we will be coming out with very soon, as to an analysis whether they are, or whatever has been announced in the white paper is catering to these problems that Kerala is kind of grappling with at this point.
Yeah.
So, yeah.
Bidisha, I can safely say that we're all looking forward to reading that. Even the last analysis was very, very incisive. That brings us to the end of our episode today. Thank you so much for breaking it down to the bare basics, like always. Thank you to our viewers for sending us such intelligent questions, and as always, and making us stay curious. We'll be back again next week with another episode of Bidishanomics.